Savji Charjan Ron Singh, recording a Chartsarefun weekly session. This is on Sunday, the November 24th, recording this for the week of the November 17th. The market had a huge move in Bitcoin. We'll look at Bitcoin's chart. We'll look at the near term, the medium term, and the long term, where we think Bitcoin could be headed. We'll talk about the 10-year yield. We know that that's a barometer. 10-year yield has been on a rapid climb since the September bottom. 10-year yield had hit almost 3.6%, and then after Fed cut rates in September by 50 basis point, the bond market kind of negated that move and started shooting higher, especially the long-term bonds. So we look at that. And then we'll look at the dollar chart as well, which has been climbing steadily. As we know, interest rates and dollar are correlated. If long-term yields climb, dollar tends to go higher with the long-term rate. So we look at that. And then the market breadth indicator, the New York Stock Exchange Summation Index, that kind of decides interest on the advance and declines in terms of the number of stocks moving higher versus lower. That had hit an intermediate term low for the year. We'll look at that, and it's just begun to climb last week. So we'll look at that impact on small caps, in particular the Russell 2000 ETF, IWM. And going to end with a story stock. It's been in the news. Barron's put out a headline about Google. There's been a lot of antitrust regulations. There's been Department of Justice kind of monopoly kind of allegations against Google. There's been discussions of breaking up its Chrome browser, considering that as a monopoly. There's been talks about Google monopolizing search with the big part of their relationship paying $20 million to Apple to prioritize their search in Apple's ecosystem. So we look at where the Barron's article projects Google. They in fact are bullish. The Barron's article says if you do the sum of parts on Google's, considering its search business, considering its YouTube business, those two itself add up to almost $208, $210, and then the remaining $50 comes from its cloud and Waymo business, $26 each. So we look at that, and we look at the chart of Google and see what the chart is telling us. With that, let me share my screen. So appreciate you subscribing to our Substack channel, chartsarefun.substack.com. We publish daily blogs. You can just get the blogs in an email as soon as they're published. Our YouTube site, of course, is Chartsarefun. That's the channel at Chartsarefun. We publish weekly videos. Appreciate you liking the videos and also subscribing to the channel. Both are free. So as I said, I'm going to start off with Bitcoin. The BTC USD, this is a 24/7 exchange that trades. And we know that it had come up close to the psychological level of 100,000. We know that this has been a huge beneficiary since election results. The new president coming in is expected to be very bullish on Bitcoin. He's talked about setting up a call it a reserve on Bitcoin and kind of as a treasury start buying Bitcoin, which is very rare. Other smaller economies have done it. Very few of the top economies have done this. So it'll be interesting if US does step in and start creating a reserve on Bitcoin. But that said, the climb has been huge the last several days till the point where it hit 99.8 thousand and then started pulling back. Now, over the weekend, it quietly pulled back to a level that it had tested on Thursday at the 95.6 level. So it tested 95.8. We'll see if it can break up, but if this turns out to be a bit of a head and shoulder with a neckline around 95.8 and the top of the head at 99.8, that's $3,000. Subtract 3,000 from 95.8, we are talking about 92.8, somewhere around, right level here, 92.6, 92.8. This level here could turn out to be the next level that Bitcoin could hit earlier this week. So that's something for us to look at. Now, if you look at the daily chart, in this case, an ascending triangle has formed. We can see that in March, Bitcoin tried to take 73.8 at a resistance pullback, kind of based out from there, hit a bottom at August on 49.2. has been climbing higher lows since then. This is an ascending triangle. So the top of the resistance line is 73.6 or 73.8 around that level. And then the higher lows are the ascending part of their pattern. That measured target from 49.2 to 73.6 exactly measured at 98,000. It took that up. It took it slightly higher last week, touching 99.8, and since then has pulled back. So as we said, it has met its target, at least from the daily chart. The key is, will it now pull back? There's been, as we can see, almost a vertical climb since that 66.8 level, right, just before the election, going to 99.8. You're talking about $33,000 of that 66.8, 50% climb in a span of 3 weeks. That's a very sharp climb. So it needs to digest that move. Long-term chart on Bitcoin, however, is quite bullish. We can see that every post-halving in the past, it has climbed steadily for, this is a monthly chart, for several months at a time. It's just kept climbing. This is in the 2016-2017 timeframe after the halving. This is the halving event of 2020, summer of 2020. It kept climbing for several months at a stretch. We have a kind of, call it a cup with a slightly slanted higher brim on the right than on the left. 69,000 was the 2021 November peak. Pull back from there to a 15,500 or so low, moving up to 73.8, and then kind of a nice handle forming, and just the breakout happened, this month in November. That move, if you measure, goes up to 132,000 based on this cup from 15 to 73. Add that up to the top of the cup, 132 is where that's headed. Yes, RSI is overbought. Yes, PPO is climbing, but PPO is just kind of tested the zero line, the histogram, and now has just begun to climb. So long term, the chart looks very bullish. It looks, if the similar moves as in the past, post-halving periods have going to repeat, you can expect several months of climb of this Bitcoin. So a pullback here, if we get lucky, depending on how much the Bitcoin pulls back, buying these ETFs, the GBTC, IBIT, FBTC, these in several ETFs that launched in the beginning of this year, may be a great opportunity for us to play this upside in Bitcoin. So that's something to look at. Near term, reiterating the fact that this could be a potential head and shoulder, the neckline at 95.6, the left shoulder moved from 95.6 to 98.4, down to 95.6, 95.6 to 99.8. That's the head moving back to 95.8. It failed right now closer to the 98.6 as the right shoulder. So far, this candle, this is an hourly chart. Last hour, it's been pulling back a bit. We'll see the next overnight what happens. Where does the market open tomorrow? If it does take out 99 and goes back, then there's a very good chance Bitcoin is going to scale 100,000 on this effort. But if it fails here from right shoulder and pulls back, breaks below 95, we can expect this to come towards the 92.8 level. As I said, I'm going to talk about 10-year yield. This has been on a huge climb from a 3.6% to 4.5%. That's a 90 basis point climb in a span of a little over, I would say, a month and a half, or just about almost 2 months. September 17th, the Fed decision came in, 50 basis point cut. Market didn't quite bless that. Market feels that this potential risks of inflation. Market thinks that there's potential, rates, the neutral rate shouldn't be as low as many people were thinking. Many were projecting the neutral rate closer to the 3%, 2.9 to 3. Market thinks, yes, the rate cuts, we already had 75 basis points rate cuts. We had 50 in the September timeframe, and then we had another 25 in early November. So market expects another 25 in December, but that probability has come down. It's more towards the 50% or lower. In fact, at 45, or it's almost like a split decision between a rate cut or a pause. Right now, it's slightly higher than 50. I think if you look at the CME FedWatch tool, it's more like maybe 59.41, but it's very data dependent based on the, CPI and PPI were relatively warm. It wasn't as sharply pulling back as market might have expected. So with that, market will look at the jobs data for November coming under the first week of December, and from there decide what's the Fed going to do in the December FOMC decision. The dollar has been climbing. We can see that it has had a huge directly correlated to the 10-year yield climb. In a similar way, this is the UUP, the dollar ETF, has climbed just as much, very sharply higher from near below 28 to 30.3. This measured target is closer towards 31, so there's a possibility there's some more upside to the UUP near term. And that dollar climb effectively has dampened commodity prices. Gold had pulled back, though recently gold got a bid, but it had pulled back quite a bit. Gold got a bid last week because of Goldman Sachs being bullish on gold, and that helped gold get a bid. But in the last few weeks, gold had pulled back, and so has oil prices. But oil stocks, the XLE and the energy sector, started rallying quite a bit after Trump's victory. They feel that the active drilling that U.S. is going to do is going to benefit the U.S. energy companies, and XLE in particular, and some of the components have done well. Now, a key indicator of market breadth called the Summation Index. This is the New York Stock Exchange. There's also for the NASDAQ, but just look at the New York Stock Exchange, and we can see that it is cycled at the beginning of the year near the 1100 level, 1078, pulled back to the 135. And then recently, as late September, early October, first part of October, it tested that 1100, the peak of the year. And since then, we can see it has been on a steady decline. And on that steady decline, it recently touched a slightly higher low, 135, 137, and 188. And from there has curved higher, as in the summation index has begun to climb. That's often an indicator of market breadth improving, which means it's an oversold indicator from market breadth in terms of advances and declines. It's too many declines now. Moving forward, perhaps some of the decliners are going to start advancing. And this would indicate that if this starts climbing, you could expect the market overall. May not be the big stocks, may not be the Magnificent Seven stocks. I will look at Google's chart, we'll see how that has pulled back quite a bit, but maybe small caps, maybe the broader market could have participating upside. So with that, I'm going to look at the Russell 2000 ETF IWM. This is another beautiful ascending triangle. We saw the ascending triangle for Bitcoin measuring to 98,000. This is 227, 228 is the, call it the horizontal resistance line, and the higher lows here are ascending and hence an ascending triangle. This is a beautiful target towards 258. Why? Because from 196 to 227, you're talking about about $31 of difference from the 227 to the 196. Add 31 to 227 takes you to 258. That's the target. It had nicely rallied after the election to 242. Last week or the week before, last week was bullish actually, but the week before it had pulled back from 242, tested that rising 20-day moving average near the 230 level. It pulled back to 226. Hope was that the gap at the 224 level would close. It didn't quite get there. It got within a couple of bucks of that. It went to 226, and the last week it has a nice move up climbing. Now, this could mean that if the momentum, if the market breadth indicator, the NYSE, for example, climbs, that means advancers outpace decliners, that means IWM could have an upward move over the next few weeks. We know that seasonally, through the Thanksgiving week, markets is typically very bullish, and perhaps we could continue this climb, break 242, and make a move towards 258 in the next few weeks. So small caps, if we do get a pullback, would be a buying opportunity. I'm still quite bullish and expecting this to climb higher and reach that 258 level maybe before the end of the year. I'm going to finish it off with Google. This was a big Barron's article about will Google survive its breakup calls from the Department of Justice and antitrust regulations, and also what will it do with its AI competition. We know that there's active competition going on in Google from both OpenAI's ChatGPT and from Perplexity's service and so on, which have been growing aggressively. So for the first thing, they compared the Magnificent Seven, and we can see across the Magnificent Seven, the best valuation in terms of forward P by E is at Google's at the lowest at 19. Everyone else is significantly higher. Amazon, Apple, and Microsoft are all in the 30 plus range, and NVIDIA is also at 37, close to 38. Meta is the next valuation-wise from a forward P by E at 22.9, it's 23. And the highest is, of course, Tesla, with a lot of speculative interest from buyers. Valuation-wise, it's at 1.1 trillion, but if you look at its, EBITDA, billion of EBITDA it generates. Interesting enough, Amazon and Google are neck to neck in market cap, both at 2.1 trillion, neck to neck in EBITDA at 164 billion. But from a forward P by E, you can see that Google is way valued better at 19.4 versus Amazon at 34. Amazon does invest quite a bit into its business. As you can see, CapEx is significantly higher than Google at 85 billion of CapEx versus 57. Its margin is not kind of the similar as Google. Google's margin is a lot higher. Amazon got its e-commerce business. Its cloud business margin is very strong, but its e-commerce business is not necessarily the best margins. Overall, forward P by E and Google, Amazon is much higher at 34 versus a P by E of 19. Now, the sum of parts that the Barron's article talked about, they looked at the core businesses of Google and looked at where they would value it. This itself adds up to 260. Search is at 143, YouTube is at 65. Those two together is at 208, way above where Google's chart is right now, where it closed on Friday. And if you add the cloud and Waymo valued similarly at 26 billion each, this is a $260 Google valuation. Now, if you look at the chart of Google, this is the weekly chart. It's a beautiful ascending channel. It's two parallel lines joining the tops and the bottoms. It has been climbing up that ascending channel since late 2022 till the point where it slightly exceeded it in a parabolic vertical way to 193. This is towards the late June, early July timeframe. And from there, pulled back sharply to 148. This is when the impact to the Department of Justice concerns and everything else hit Google quite a bit, and it from 193 got cut to 148. Since then, it tried to reclaim that, so it broke below that ascending channel, tried to reclaim it towards the bottom end of the trend line, made it at the earnings. So this is actually call it a nice cup and handle from 170 to 148 back to 170, a shallow pull back to 161 and the break higher. That break higher from 148 to 170, you're talking about 22 points. At 22 to 170, that's 192. So potentially this cup and handle was measuring to a retest of that high near 193. Didn't quite get there. It got to 184 after earnings, pull back the week right after, pull back, and now it is broken lower, is hovering around 166. It is at a key, in this case, it closed below the 20-week moving average at 168. It closed at 166. We got to watch Google. If the stock breaks lower, it breaks below the 161, which is the next level of support at its 50-week moving average at 161. Also, the lows of early October at 161. We're talking about a breakdown towards the 140s, not bullish at all. So we can see that from an ascending channel, it has been climbing up it, broke below it, tried to take it up, went to the middle of it, failed. This is a bearish candle for this last week that it ended, touched 180, but then closed towards the lows of the week near 166. The low was 165. If the decline continues this week, Google is not looking for it good for the bulls. I know many investors who are value seeking are trying to snap up Google, as we showed in the Barron's chart from the Magnificent Seven. It's got the best value, P by E 19, but then this could be a slippery slope if there is antitrust regulations hitting them. Though there is now some expectation that under the Trump administration they may be more lenient towards Google, but there are concerns anyway if the stock's fundamentals get impacted. Knowing that, OpenAI's version 5 will come out, Perplexity is firing on all cylinders, winning over a lot of the customers coming to their search, question answering kind of search business. Advertising may start flowing into those companies, and that could impact Google's cash cow. So something for us to be worried about. I would be careful in adding to Google yet until we know that for sure we can break this 180 level and can resume its climb to the top of the ascending channel, closer towards the 200 level. With that, good luck trading. It's a bullish week next week with Thanksgiving. Hopefully, Bitcoin may make another attempt at 100,000, though, as I said, near term, there is a fear of a pullback towards the 92.5, 92.6. And small caps look the most bullish. We feel that IWM has got upside to 258. It closed nicely, towards the top of the range at 238, 239. We expect continued climb on small caps, and we expect the 258 to be likely tested or met before the end of the year. So with that, good luck. Talk to you next week. Thank you.